right, what's going on, everybody? Chris Franks with TexasWest Capital. And, of course, our friends, Andrew and Tillman from
Arch Public.
Man, this is the delay there. I was like looking for that excitement. Arch Public. Yeah, we're killing it. Yeah.
Why serve it up like you don't know the name of it? And we've been working together for years now. I mean, you should have just said it yourself, Chris. I mean, I'm not good at the baton handoff unless you tell me there's a baton handoff, okay? I'm an offensive lineman.
Take the handoff, right?
I don't deal well with catching things, and I'm a blocker, buddy.
Those just tuning in, this is Beards and Bitcoin, which may soon become Two Beards and a Boy, because Andrew
made a foolish bet. And if you want to tune in to a podcast that could have one of the ugliest Schmiegel-looking faces that you will ever see, tune in next week, because that face up above me won't have a beard covering it up anymore.
Tell them what happened.
I'm super excited about it. Listen, these types of betting moments where you lose and then everyone has to see what is a byproduct of that loss. It just lingers. It's like the loss, you just keep getting to live it over and over again. It's awesome.
Yeah.
Well, let the people understand real quick what happened with that, why he's going to have to shave his beard.
So, made a bet with our sales team at Arch Public that if we hit a certain level for the month that I would shave my beard. Now, to their credit, there is a meaningful percentage of that sales team that said, we don't want you to shave your beard. Not that they love me that much, but they saw a photo of me without a beard and they said, I'd like to nominate, let me be the first to say I don't want Andrew to shave his beard. So, it is what it is.
So
we can do this. We can just do this, right? Does that help everybody? Right,
that already changes it quite a bit.
I mean, maybe like a Fu Manchu they'll let you get away with, or something, really fun for a little bit.
You just need to leave it right there in the middle and like braid it up.
Yeah, you need that patch, the soul patch. That's what you need.
The soul patch. Then it just gets creepy. Then it gets like it's like a mustache, writing it just itself. But anyway, hey, listen. So much like Bitcoin, Andrew's facial hair is going to drop off a bit. And, people are getting kind of freaked out about Bitcoin here. I mean, what else is new, right, guys? I mean, it seems like every time we turn around, Bitcoin pulls back a little bit and everybody starts.
There was a moment yesterday, the markets opened after Labor Day and Bitcoin popped from 107/108 up to 110, 111, and now we're at 112. That's not, micro price adjustments. I'm not a predictor of those, but I will say that it's not a surprise that it happened on that day when sell in May and go away is over. Everybody's back at the office. All the traders are there. And all those traders have sales teams that work with them that are there to make money and are calling everybody saying, get into this, get into that, get into this, get into that. And
what would be my question to all those people, Andrew and Chris, is what would be an acceptable range of volatility? Like, because we're talking about like 2%. So what? You're talking about everything that's happened from the top of 123 to where we are now and all the fluctuations in between down to 107. You're still less than 10% move.
Yeah.
What do you want is the point.
What you're looking for, the reason why some of that happened yesterday has continued today is, I would call it a little bit of the last third or maybe the third quarter of retail holdout finally capitulating, meaning I'm not buying Bitcoin. Bitcoin's stupid. It doesn't make any sense. Well, you look at Bitcoin ETF performance over a 6-month period and then over another 6-month period. And now we've got almost another 6-month period books, and it's just higher and higher and higher. So at some point you forget, you don't care what the Bitcoin story is. You're just looking at the asset as a plus for your portfolio in terms of performance. Okay, fine. You know what? Give me some of, IBIT, give me some of BitB, some of FITB. let's rotate out of a little bit of this and let's put it into a Bitcoin ETF. That to me, that's what it is. That's what it looks like.
Well, to me, it's like, okay, if you have proper allocation to begin with, let's say you're an aggressive person and you're at like what I believe is 11% of your available cash needs to, in my opinion, be in Bitcoin. That's based upon historical performance. On that 11% would have offset all of the inflationary power on the 100%. It seems like a pretty good, objective, right? As a hedge, as a way to protect yourself and protect your purchasing power. So if you have a 11% stake in Bitcoin and you have a 2% movement in price, your portfolio is down 0.2%, or 0.02%. Who cares is the point. You have to have volatility to make money. So there is no universe that exists where something goes up forever every single day. The markets aren't that perfect. Even if you believe in the efficiency, law of efficient markets, there's still inefficiencies from now to now to now to now. The supply and the demand can't perfectly meet each other in an upward trajectory at 45 degrees. It just doesn't work like that. And so the way you need to be thinking about it is how much exposure do I have? And do I feel like I need more, or do I feel like I need less, based upon the professional advice that I'm getting by my professionals that I pay to give me financial advice? And if you want to ramp
that's not us. Notice that is not us. I just want to make sure we point this out.
Well, that's my point, is like you have to come up with a strategy against your net worth again, and we don't know that. So that's why we talk in generalities for the most part, because if somebody has $10 million in cash, the prescription is different than if somebody has $100,000 in cash and it's borrowed against their HELOC. Like, you can't approach those dollars the same. And so everyone's circumstance is different. That's why it's important to have a financial advisor that is licensed and all of that. But again, these volatility swings in Bitcoin are very nominal if approached prudently. And they're, if you're complaining about them, then you don't want the upside, because that's the only way you get it, is the way I look at it. And so when I look at NFTs are something we talked about on Melker Show this week, and I was a big believer in NFTs, not the art specifically, but the application of transferring unique intellectual property across a public blockchain. That fascinates me. Well, guess what? The market is at all-time lows. Everybody hates it. So if you're a believer in that technology, you think it's going to come back around, you think there's collectability in those things, to me, that this is the time where you would be looking at it, not when everybody's saying that they're the greatest thing since sliced bread. And if you live a life like that and you dabble in things that have blood up to the bridle, most of the time those things are going to come around to where you're net positive, and you're going to be able to get out at least somewhat whole or not in profit. And you do enough of those, and those compound on one another, and the amount of chips that you're placing on the table start to compound. And that's how you get to a point where then, the holy grail, in my opinion, for America, and the American dream, the modern American dream, it used to be the white picket fence and a mortgage for 30 years. I think now it's finding a way to make your money make money for you, to the degree that it buys you out of the system, where you have financial, you have time freedom. And that's not, if that's your objective, and you use tools to compound your money, and you use risk, as a prudent way to achieve reward or yield, then I think that there's a ton to be garnered, especially from stuff like you're teaching, Chris, because it's not trying to hammer it out all at once. It's just over a long period of time, learning the skill of compounding dollars. And that is an exceptionally powerful thing if you understand the laws of compounding, which most people don't.
Well, and they don't want to, because compounding takes time, right? I mean, let's face it, most of the people, retail, that gets involved in markets And it's been the same way. I've been doing this this is 31 years now. So I've seen it across, stocks and futures and precious metals and Forex and crypto. It's always the same people, right? I'm not that exact same person, but that same type of person. And they get in there because they're looking for the quick wins. They think it's going to be easy. They think, they're always thinking in terms of the single trade they're on. They're doing the opposite of what you said earlier, which is they should be looking to buy when everybody's scared and there's all this blood around, because odds are if you do that, over time, you're gonna come out ahead, right? Versus where everybody gets excited is when things are breaking out. People get excited about gold when it breaks out. People get excited about Bitcoin when it breaks out. And then we get the pullback, which takes a little time. It's a little bit of a pullback. We're still above 100,000, which, by the way, let me point out, Andrew used to talk often about the fact that everybody be complaining, look, it can't even get above 100,000. It can't even hold above 100,000. And here we are for 100 plus days where it's remained above 100,000. And so, let this be kind of a wake-up call. If you're not consistently profitable in markets, that most of what you think when you're first coming in is absolutely 180 degrees different than what you should be thinking. And if you're lucky enough, if you're fortunate enough, you figure that out sooner rather than later so that you're in the market profitably 5 and 10 years later with all this benefit of having done that. Because otherwise you end up like 95, 99% plus of the traders that come in that are back out of the market.
Well, let's talk about an actual example of this that I've lived out in my own life. I know Andrew has an example of some banks that he wanted to purchase back in the day when there was blood in the streets. But, when I'm looking at a technical chart, right, and let's say there's this key breakout level that we're approaching, we're just bumping our head. And when it pops, it's going to, there's going to be a ton of volume injected, tons of price movement, potential breakout, especially if it's price discovery like Bitcoin has been. You're always, as a novice trader, tempted to buy the breakout.
Yeah.
But as the most experienced traders buy the retest. They don't buy the breakout. The breakout is where you're incurring more risk than you have to. If it's a bull run and that truly is a breakout, then it has to be confirmed. And if it's confirmed, then you buy at that confirmation point. Why? Well, because you've de-risked the trade. A ton of risk has been taken off. Because there's a lot of false breakouts that then crater in giant red candles that force liquidity events for all the people that are playing with margin or a lot of people play margin at breakout points, right? Mm-hmm. So you sweep that liquidity by having false breakouts and then tanking the price. And that's how the market works. And so if you get past the breakout and then a solid retest bounce with massive volume, that candle is much less risky to enter than the giant green candle that pushed through the breakout point. But only time and experience will get you to take the breakout or to switch, because it's a lot sexier to buy on the big green candle, and it gives you the juice buying on the big green candle, and you don't have to wait to buy on the big green candle. And you also, if you buy the retest, sometimes you miss the trade. Sometimes it keeps going up, never retest, and you don't get in. And it takes maturity to go, you know what, man, there's a next one coming down the tracks. I'll wait for the next retest, See,
and that's exactly the same thing I've been preaching for years, with what I teach. And that's why we focus on teaching them to understand how to get in before it gets near the breakout. The idea is to be in before price breaks out. Let everybody else FOMO in and carry it. If it breaks out and continues going, guess what? You're already in. You're already up and profitable. By the time it's breaking out, it's all cake, right? If it goes up and retests, guess what? You're still already in, still no sweat off your back, and it goes up. Worst case scenario, it breaks out, false breakout, it comes down, and it comes way back down. And maybe then you're getting out a little bit above where you entered anyway. I mean, there's so much less to lose in that, and so much less risk associated with that, and so much more opportunity with whether it breaks straight out or breaks and retest and goes that you can get into, right? But that's the reality of it. I mean, I'm so glad you said that. I was waiting to say it if you didn't. But just because you wait for that retest doesn't mean it's always going to happen. No. Sometimes it does just take off.
But you're just stacking odds, right? You're just trying to get a healthier win percentage and a lower, risk ratio, so that you can, when you do hit it, it's worth your time, right? Because where you get in on those big green candles is subject to things that are outside of your control. Whereas when you get in on big red candles, you're filled immediately. Like,
Life sucks right off there. Well, yeah. So, I'm looking at this here. So we've had a couple of weeks here. So this week's shorter week because we had the holiday weekend. We've got NFP on Friday. So markets not really going to be very aggressive, I don't think, up into that. The week prior, there was a lot of de-risking into the end of the week, Jackson Hole, all that. So we've had a few weeks where, Bitcoin's been allowed to kind of pull back, where there's been a lot of de-risking. I think it potentially sets up for a good September. What are you guys thinking?
Yeah, I think there's, again, money flows is going to rule the day. Been saying it for a while, but Bitcoin and to some extent Ethereum are going to be controlled by, Wall Street calendars and Wall Street flows. And, underneath Wall Street flows and Wall Street candles are simply wealth management clients making decisions to allocate to those two assets. And so that's what it's going to look like. You may get moves. Ethereum has had a significant move over the summer, but that mostly has to do with a couple of really sizable Ethereum treasury companies, kind of breaking the glass ceiling and being considered serious in the space. Tom Lee's being the chief of those. And then on top of that, even during the summer months, you saw a continued increase in ETH ETF inflows. So, ETH has had a move that will continue throughout the fall. Same thing with flows associated with, the Wall Street calendar, and it just kind of is what it is for both those assets. But again, the idea is that the floor is really high. The ceiling is another conversation. What is the ceiling for Bitcoin versus what is the ceiling for Ethereum? I don't know. I know that it's higher than it is where it is right now. How high is the next question? And I'm not sure.
I look at if you just talk about how hot this summer has been, for example, I've never seen a hotter summer. Summer is typically the most boring part of the year for trading, for any volatility, for any price movement at all. Typically in these sideways trends that don't have really any luster to them at all from an opportunity perspective. And this summer has been the exact opposite. So, I think that momentum doesn't change unless a larger force is acted upon it. And I think we got a lot of momentum. So I would expect, to Andrew's point, the normal hot period of the year, which is typically the fall and the spring, I would anticipate those being exceptionally hot this year, unless some macro event changes things. But I mean, I think the gap down in the markets the other day with simultaneously the massive push up in Bitcoin kind of says it all. It wasn't just like a little push down. There was a giant gap and on all the traditional assets. And then at the same time, a giant green candle in Bitcoin. So it doesn't act the same. It always will surprise you. Sometimes it does act the same, sometimes. But going into the fall, I think there's going to be a lot of money allocation decisions that are taking place. And Bitcoin's going to catch a larger portion of it than any subsequent year we've ever been watching. So should be better than last year, for example.
So hot girl summer becomes hot girl fall and winter and potentially spring. Hotter girl.
Yeah, when the kids are at home, all hell breaks loose. There's not much else going on but figuring out what family vacations and what the summer activities are looking like, I think, for most Americans. And so when I think Andrew always makes the point that most money managers are either working or they're not in town. They're out somewhere else. And so I think they're all back in town. The boys are back in town. And so the money, they're at their computers and they're hitting enter a lot. And that makes the money start moving around.
So we got a question.
Well, and it also coincides with, academic calendars, right? So money managers that have children that are either going back to school, elementary, middle school, and high school, but also college, getting kids off to college. And, that effectively all gets done the last couple weeks of August. And post Labor Day, you're now into the meat of, fall. All sorts of meetings are on the books associated with where's my portfolio? Am I positioned correctly heading into, essentially the end of the year in Q4? Because October starts Q4. Are there potential tax loss harvesting or tax issues that I need to be aware of to close out Q3 and then heading into Q4? Or from an annual standpoint, should I keep an eye on this, that, or the other? September and October are absolutely chock full of activity across Wall Street and wealth management, because you get into November. Once you get past the first week of November, things start to slow down again because clients aren't as engaged, especially clients that have meaningful assets and capital. Clients that have meaningful assets and capital, they're slowing down and they're getting into family time or travel associated with Thanksgiving, right? And so the last 2 weeks of November look very, very different than the last 2 weeks of October. So this 8-week period right now, if we don't see meaningful movement in crypto assets over the next 8 weeks, I'm not sure we, flush out and end up at meaningful new highs through the end of the year. There's probably a good chance it's going to happen in the next 8 weeks based on, again, allocations and adjustments that get made, people doubling down on winners. So we'll see, but that's what the calendar looks like. That in that calendar means that there's, capital flows follow that calendar. It's just a real thing. It's just the way it happens.
Jeff has a good question in the chat. Is Bitcoin adoption by investors going to drop housing by 20 to 30%? I think it's actually going to be the exact opposite. And I'll tell you my theory behind it. Number one, capital markets, the largest liquidity pool tends to gravitate towards the vacuum. Nature abhors a vacuum. So when there's opportunity to place capital, capital gets placed. And when you talk about the amount of wealth that's stored in real estate versus the amount of wealth that's stored in Bitcoin, real estate's definitely the larger capital pool. So more people have more discretionary capital to place based upon, how much value they have in real estate. For example, I know a lot of people that have 80% of their value in their real estate they own. They're developers. They're constantly doing 1031 exchanges. They're just rolling to the next one. Well, that person taking 10% of their net worth or 11% of their net worth and putting it in Bitcoin is a lot bigger number than some people who have some Bitcoin wanting to hold it instead of buying houses. So I think the collateral value of Bitcoin is being injected into real estate at such a rate that it's going to compound the liquidity loop that is harvested between those two assets. And I think Bitcoin, number one, is going to be the most valuable piece of collateral when you own real estate, which will allow you to leverage that collateral to own more real estate with less hold costs. So it would compound real estate ownership, in my estimation.
Yeah, over the next 2 years, mortgage rates are going to come down by 2.5% across the board. Just because the Fed is going to have a new Fed guy and a couple new Fed board members are going to be a part of that conversation as well. That will be, Trump affiliated folks. So he's going to get the rate cuts he wants. Also, there's been talk by the Treasury Secretary that, they're going to declare some sort of housing emergency.
I saw that.
And what will end up happening is is not only will rates come down, but they'll probably bring to the market, instead of 30-year mortgages, there'll be 40-year mortgages, 50-year mortgages. And let me just tell you, the boom that will create, the increase in real estate and housing prices that will create, again, will rival what happened during COVID. I would bet on that. I would bet on that. And so
I would bet on the cap gains laws regarding sale of real estate also being changed. I would hope that would incentivize everyone to start selling property that they otherwise couldn't sell.
Well, there's macro and micro here too. So you've got what I just talked about is macro, and then you've got micro things like, down in Florida, they're minutes away from removing, real estate property taxes. They're going to vote on it, right? So
Yeah,
DeSantis has been absolutely all over it, saying, listen, if you own your home, why are you effectively renting it on an annualized basis by having to pay property taxes? So that's going to happen. If that happens in one state, it's going to happen in another, and then another, and then another. So from, real estate is going to go through something over the next couple of years. Generally speaking, unless the world is actually absolutely coming to an end, real estate prices don't go meaningfully down.
If they do, the entire nation goes down, because
that's my point.
The vast majority of our wealth is found in our real estate, right?
Yeah.
So
Yeah.
you can't cut your nose off to spite your face. If there's one market that they will continue to inflate to eternity, it's the real estate market.
And of course the first pushback we'll usually get to saying something like that is that people are like, oh, but everybody knows that you shouldn't be putting your money in a house now. It's a terrible place. Grant Cardone says you shouldn't be putting your wealth in there. But, I think the thing that people that are saying that should, definitely step back and think about is that they've probably got themselves in this closed loop online, right? Where you're fed that same information over and over again. And it feels like everybody knows, kind of like Bitcoin, right? But the reality of it is, a lot more people know about Bitcoin. Not everybody knows about Bitcoin. I wouldn't even say half the world knows about Bitcoin. And even for those that do, a smaller percentage of them are actually actively interested in getting involved in it.
Well, how many people do you know that get bored when they own a Bitcoin during periods of owning it? Like, if you own Bitcoin for 10 years, you start to get bored. You start to go like, hey, like the comment in the Sats McGee says, should I build a bigger garage to fit a couple more Lambos in there? But my point is that I don't know anybody that gets bored of walking out on their patio of their big $1 million, penthouse. That's not boring. It never does get bored. And so there is real world value that can be extracted. That I think owning a home, I would disagree with that. And I'll tell you why. Especially if you have kids, because the hill that your kids are going to have to climb to have a home in their name is going to be a lot steeper than your hill. Yeah. And the wealth gap is growing all the time. That's the nature of the monopoly game that we play. The richer get richer at a faster rate than the poorer get richer. Yeah. So if you believe that that gap is going to continue to widen, then you also have to believe that the wealthiest people are going to want to control the markets of the things that are scarce, real estate being one of them. No different than why Bill Gates, a lot of people were scratching their heads as to why he was buying so much farmland. What's he doing with farmland? Well, it's just a scarce asset that's producing cash that's needed for the basic necessities of humankind. Like, that's not a bad place to put your money. And so as the wealth gap continues to grow, it's going to be harder and harder for normal people like us to have homes that they aren't subject to other people to live in, subject in price, subject in taxes, subject in lack of privacy, all sorts of things. So if you can secure a piece of property and you can title it and you can put it in a trust, never to be sold, you're in my mind, you're passing wealth onto infinite generations that are your bloodline. And how much value is in that? I don't know. When you die, you probably see things differently, but I would imagine you would see your life as being, well spent securing that type of asset base for generations to come. That's just kind of my 2 cents on it.
And there's something to be said for actually, having real estate to which you can do with what you want, right? You want to change a room, you want to put on some paint, you want to do something, if you're renting, you're going to have a lot of difficulty getting any of that done. If you own it, I mean, for all the negatives right now for owning real estate, if this whole thing, and I can't see why, honestly, I can't see why if DeSantis puts this up, he says he's going to put this up for a vote, let the people of Florida vote to decide whether to get rid of property taxes or not. And I can't see why that those that never vote for anything wouldn't jump out there and go, yeah, let's do this. Let's get it off there.
Well, to Jeff's point earlier, it's being forced upon them by the standards of Bitcoin. Bitcoin's standard is changing things in the world. And when you talk about real estate and Bitcoin ownership, and you hold real estate in one hand and you own Bitcoin in the other hand, there's a major difference in carry costs. And that is going to be brought to an equilibrium, right? That is going to be, there are intrinsic values of owning real estate that demand a higher carry cost than owning Bitcoin, in my opinion. I don't think carry cost is going to be gone in owning real estate. Still have to paint the house every 10 years. Still got to put a new roof on there. The carry costs are there. It's your use out of those carry costs, though, that make it more valuable. But it has to come down, or money will flow to asset classes that don't have that carry cost at a greater percentage. And so I think real estate is just destined because of, it has so many similar characteristics to Bitcoin that some of the characteristics that aren't so similar, like carry costs, are going to find a way to that equilibrium.
Yeah. And most likely it's going to affect, personal home ownership versus, commercial real estate or something. And it may, I don't know, maybe there'll be a provision in there that says, hey, listen, if it's a second or a third home that you own personally, maybe there's some sort of property tax you're going to have to pay on that. But at least, for the initial home or your main residence, I think, like you guys are talking about, I think it really sets up a lot of potential for just the average person out there.
And there are some tax benefits to owning real estate, right? You get tax write-offs. I will say this, there's some stewardship and some wisdom and knowledge that you have to carry into anything to maximize what the potential of that investment is. And I'm not your investment advisor, but I will tell you something that I've learned in the mortgage space. And if you are going to invest in real estate, that's been handy to me, which is, mortgage companies, they front end load the interest on mortgages, which means, if you're paying $1,000 a month, day one or month one of your mortgage, $900+ of that is going to interest. So it's a waste in terms of, the first 5 years of that mortgage is putting a very small dent in the principal of the mortgage. It's all interest. And that's how they make their money. So that if you get wealthy enough as inflation grows and you get higher paying jobs and you pay off that debt, they've already made all of their money in the first 5 to 10 years. That's why they do it. Most people don't understand that structure. Most people don't think about it. But a hack to beat that system is to, let's say you're closing on a piece of real estate that's $1 million and you got to put 20% down. And let's say you have 400,000 to put down, and a lot of people will just put the 400,000 down so that they get their payment lower. So you may, by putting an extra 200,000 down, you may get $2,000 off of your payment. So you may go from 6,000 to 4,000. But remember, of that 4,000, $3,800+ of it's still interest. You're still making very small movement in the principal amount. So the cost to carry that debt is much higher in the early years. So by keeping the $200,000 in your piggy bank, and then after you close, applying that as an additional principal payment in month one and buying the debt down, you take that debt off the table so they can't charge you interest on it. And just that little mechanism will take you from paying less than 5% principal each month to like 35% principal each month. And it accelerates your payoff, and it keeps you from spending as much interest as they want you to spend, because you've avoided the most potent years of their earning potential in terms of charging you interest.
Yeah, exactly. Pay attention if you don't know that, folks, because that reality of the fact that you're paying so much in interest in the beginning, your first 5 and 10 years there is just, it's ridiculous. I mean, interest is what we pay for the future use of money today. Okay, I get that. But the banks, they really up that. The mortgage lenders really up that, because like you said, they end up getting it all front loaded there. So whatever happens, they're making significantly more than if they were just lending money.
Well, it's no different than anything in life, though. There's ways around it. What I just described to you beats their system by definition. And I'll tell you how you can look at it. Take your existing mortgage document and your amortization schedule. Find the principal. Think about how much cash could I apply to my principal right now to my mortgage. Okay. So let's say that's $50K that you have laying around that you're thinking about, what should I do with this? Well, you can find out what the ROI of placing that as an additional principal payment on your mortgage is by going to that table, taking how much you owe right now, and going to the principal column that shows minus 50,000 of that. And you'll be shocked that will move you years down the amortization schedule. So then you look at that and you go, man, if this takes my mortgage from me having 27 years left to 19 years, like, is the 50 grand worth 8 years of interest payments on the most expensive part of the table? Yes, it is in most cases, right?
Yeah. And I think what Andrew said earlier about, these home loans, starting to see more products at 40 and 50 years out. I mean, some people may go, what? That makes no sense. But really, doesn't it? I mean, look at vehicles. What are we doing, like 9 years now, something? And this has become pretty common, 8-9 years on a depreciating asset. I mean, the moment you're driving it off the lot, it's down 20-30%. I mean, you don't even have to drive it off the lot. You just have to purchase it, and then it becomes used, right? So
$1,000 car payment used to be like for the supercars when I was a kid. Now the common man has the $1,500+ in car payments every month. It's insane.
Well, think about this: if you can get a 40-year mortgage at 4%, correct me if I'm wrong, but most people are going to go buy the biggest house they can possibly afford. Like, no question about it. And so, I'm assuming that will have a meaningful trickle-down effect on everything housing adjacent, right? House builders, wages associated with housing, the amount of houses that get sold, the price of homes going up and to the right. Yeah, it's going to have a meaningful impact. So, we'll see what comes of that. But if it's being floated that there's going to be there's going to be more than just adjustments of interest rates to the downside, in my estimation. I think
I agree
more.
And of course, that helps out companies like Lowe's and stuff like that, which of course, Whirlpool, those home related stores, which, as I was speaking about earlier, if you want to update your home, you want to do something, so I think, that ends up helping out quite a bit as far as, even if you're looking at the economy, what's going on with the economy, as far as that goes. And, markets, I think, start getting even more interesting at that point.
It's like a flood, when the liquidity opens, the floodgates, it starts changing the demographic, like the entire landscape. The water starts flowing to places that you did expect, and everything in between. And it's just part of I think the art of investing is trying to predict where those pools are going to gather.
Yeah. So real estate, Bitcoin, what else you guys?
Hey, I'll tell you one thing that broke some news this week that I think is understated, is the silver pop.
I'm surprised there. It's a 14, 15-year high here. And
Listen,
you don't really hear
silver, you talk about something that's been artificially suppressed. I mean, I think it's a coiled spring of 20 years of potential. I really do. I think it's that potent, because the way that I've always been taught to look at silver is 1/16 of the price of gold. That's how everybody since the dawn of time has judged it. Well, gold is at what, $3,500 an ounce right now? What's silver at? $20, or
No. Silver's at 40.
Is it at 40? Okay.
Yeah.
So we're still, there's just so much to catch up to that 1/16 ratio. I think it's pretty exciting to see the breakout.
Yeah. And of course, gold, that we're talking about silver, got to talk about gold real quick. It's been in that largish triangle. If anybody's following me, I've been talking about it, seems like extensively for the last, couple of months here as it's been building and, looking for that breakout there. And so, again, just some consolidation into a breakout, new all-time high. But I did post, when it comes to gold, I did post a chart, a yearly chart. So each candle's a year, 12 months. And it looks like, we've still got some further upside here, but it looks like we could be nearing the end of the cycle off that 70s low. 5 waves up on that.
Bitcoiners have been taught to quote unquote hate gold. It's the equivalent of, well, you should just hate money. There are other assets outside of Bitcoin that exist. And those assets at different times are meaningful to own. It's why the idea of a diversified portfolio exists. Right. I said this to Chris before we started the show. Jim Cramer famously has often been wrong. But one thing that he's said for years and years and years that's right is there's always a bull market somewhere. Yeah. Right? There's always a bull market somewhere with something. So whether it's silver, whether it's gold, whether it's Bitcoin, whether it's something is moving up and to the right somewhere at all times. And so the move in gold has been meaningful. Now we're getting some movement in silver. What is the overall move telling us about something somewhere? I'm not sure. Not smart enough to know that. But I do know that generally speaking, when meaningful asset prices move like gold and silver have, it's generally a foundation for other assets to move in that same direction. How quickly, don't know. But we're going to see a correlation at some point with other assets that make those same kind of moves.
Yeah, I couldn't agree more. And listen, anybody who thinks gold is not worth owning has never held a gold coin in their hand. There's something in your soul that resonates with gold ownership. I can't put it any other way. You never get sick of looking at it. It's been valued since man has existed, and I believe it will always be valued. And my personal take on that is because I think it's valued in literature at a level, including the Bible, that makes it a valuable asset. Like, it's just ingrained in man's psyche that this is a rare and very useful tool. And it also is exceptionally beautiful while being that useful. And you look at the dawn of like computers and all of that, wouldn't have been possible without gold, wouldn't have been possible without platinum, like all of our modern technology relies on these metals. So there's not only all of this built up human value, but there's actual practical value. There's less gold every year that exists because we're using it up. We're actually consuming the gold, and we can't mine it as fast as we consume it because technology is going faster than the mining.
I can go back about, 12, maybe 15 years now. Everything that I learned about gold, I learned from the Gold Member on Austin Powers, the movie Austin Powers, the Gold Member. So starting there, I mean, the things that you can learn about smelting it and about all sorts of things. Everyone should go back and watch that movie. It's an important movie associated with the move in gold. You know what I mean?
I should have known better than to take him seriously as he started talking about it.
I had both of you guys leaning in.
I had
both of you guys leaning in.
And there it was, showing us his gold member. All right. So, yeah. Now, here's the thing. So, let's say what I put out there is correct, right? And gold is nearing a multi-decade cycle top, right? Now, technically speaking, usually we should expect that if gold's going down, dollar's going up. So DXY goes up, generally speaking. Now, the thing between them is Bitcoin, right? What happens with Bitcoin? Does Bitcoin continue up or does Bitcoin pull back with gold?
We have people commenting about the movie in the comments. Would you like a schmoke and a pancake?
See, they're about as childish as you are, Andrew. That's why we have them here.
Like a bong and a blinsk.
Listen, the movie quotes that you remember, I wouldn't remember anything. I've seen that movie probably 5 times and I don't remember half of the plot. So,
well, it's the best when he goes behind the little removable wall to change, and he takes off his clothes, and it goes and you can see it, the gold light from his gold member.
Oh, Lord have mercy.
In an unfortunate smelting accident.
Something tells me Tillman watches movies like my dad used to when I was a kid. There was this time where I was probably like, oh God, I don't know. I live in San Angelo. I was probably, I guess, about 4 or 5 years old, maybe. And he took myself and my sister to the movie theater to watch the newest Muppets movie. And like 20 minutes in, snoring up a storm. And,
yeah, I don't like it. It takes a lot to keep me occupied in the movie.
I think maybe he watches movies the same way. But anyway, so let's get back to this. So let's say gold cycle tops, starts, longish term correction. Dollar heads higher. Now we've got Bitcoin. Now Bitcoin's done this whole kind of, because it's still new, this whole kind of change from what it is, right? To this point now we're looking protection against inflation. But if gold's going down, the dollar's going up, inflation is likely headed down. So there's that. But we also know gold tends to move like tech. And AI continues to, double up and double up again. So I think there's a point in there at which even if gold hit that cycle top and started doing a big correction and the dollar strengthened, I still think there's opportunity for Bitcoin to potentially rally, to continue at least moving up. Maybe not, again, a blow off top like we're used to, but maybe it's more of the same of what we've had this cycle so far, which is this move up, a lot of sideways, move up, a lot of sideways, move up.
Well, in like $10,000 chunks, it's like, these $10,000 ranges, it seems like that we're moving into and out of. No, I personally think that things have been manipulated for so long and the cap is being pulled off so quickly that we're going to break all the traditional rules as it pertains to technical indicators. Like, for example, as well as I do that those cycle tops mean nothing when you're in price discovery, because price discovery can, you don't know where it's going to go. You're discovering it based upon the interest. And I think that you're right in the fact that just because there's outflows in gold, that we could see inflows in Bitcoin. I wouldn't put it past Bitcoin to be able to garner that. I think macro environment and the amount of money that's going to be printed and the wars that are being waged right now and the uncertainty in the financial markets are pointing people towards having a lot of money in a base asset that they feel very comfortable with. Cash is not that anymore. So you have to pick something other than cash. Gold is one, but there's a cap on how much gold any normal person really wants to have in their house. And then beyond gold ownership, like where you are just owning paper gold, doesn't achieve what you want. So you have to then go down the ladder and go, okay, well, what is something that gives me that? Bitcoin is very unique. And I think it will continue to catch capital as a hedge. So I don't think gold and Bitcoin are tied to one another. And in fact, I think that's the beauty of Bitcoin, because I've seen the manipulation of gold. There's been many lawsuits that are public about the biggest banks out there that have manipulated the COMEX. You can go research for yourself. But you can't do that with Bitcoin. You can do it for a day. You can do it for a week. You can maybe do it for a few months. But Bitcoin will not be suppressed artificially, because you can only do that with paper mechanisms that no one wants to own physically. And everybody will always want to own some Bitcoin physically, because the whole purpose of it is to not have to trust other people with custody. And gold doesn't lend itself to self-custody very easily. So that's where the machine falls apart for it. I think Bitcoin, because it does, always will have an appeal for people who want to have it in cold storage and not on exchange and not an ETF, and not, there will be constant demand in that category.
Well, hopefully that'll be a big enough group of people, or a big enough, section of Bitcoin, because, as we've talked about on the show before, as Andrew points out, that we're going to get the banks in here, and, they're going to be bringing in Bitcoin as collateral for things. But the idea is the bank has to hold it. So people that are just getting in now with Bitcoin, they're not like we are, which is very much, we want to hold our own Bitcoin. It becomes a lot more of, well, this is what Bitcoin can do for me, so I'm going to let the bank hold it so I can get these other benefits in the fiat system. I think the biggest way that Bitcoin continues to press higher is it continues to be brought in as what we've talked about from day one, which is becoming part of that base layer, becoming part of the system, right? It's not going to be the system itself. Bitcoin isn't going to be the thing itself. But if it becomes that thing that underlies, that's underlying the financial system itself, I think that's what
it could be the number one form of collateral in the system. It could absolutely be that. It's the best form of collateral. You can repossess it with the push of a button. You can repossess it with the smart contract. You don't even have to push the button.
Exactly.
It can get repossessed based upon the violation of the smart contract, and only the smart contract, which, that's too valuable for us not to build on, right?
Yeah, exactly. So hopefully we'll continue to see this, going on and kind of in these ways we're thinking. It's just, man, I try and think, not just the 31 years that I've been in the markets, right, but even before that, and just trying to look back at what point historically, have we had such a combination of just absolutely crazy events happening at once, from, again, Bitcoin and digital money to
AI,
to
quantum computers,
I mean, it's
to drones,
to
everything. Yeah. I mean, the fact that these wars are being waged with with drones, it's just, we're in a new era, and it's moving parabolic up the curve as it pertains to knowledge and technology, and that lends itself to much shorter cycle rates, right? We're getting to see generations lived in 5 years, 60 years worth of innovation happen in a 5-year period of time. That's where we are. It's only going to accelerate. That's the nature of AI. That's why there's such a fight for it. I'm
telling you, I think if there's one place people should be looking, it's energy. I think energy is the thing. AI is going to find a bottleneck in energy. We're already pushing limits in different places. Continued digital currency, growth, Bitcoin mining, all these things, AI, HPC centers, all these things want more energy, want more electricity. So I think, one of the places we continue looking is those that are, in that energy sector, and trying to find maybe some new upstarts that are really looking at different ways potentially of providing that energy, because without it, everything else bottlenecks and stops, right? I mean,
Well,
you just can't push it further on.
Well, it's like the energy, the oil industry, right? What's the most important thing to the oil industry? Well, the automobile industry. So you have these systems that have a lot of value to one another, and it takes not just the replacement of one level of value for the innovation to really achieve market saturation. It takes appeal to every layer. And so whatever energy comes around, no different than the Tesla industry, right? That is creating new industries that didn't exist before Teslas were as popular as they are. That's going to continue, just like the liquidity pools gravitate from, what's most used to what's least used. That's just the nature of the markets, because there's more opportunity over there, right? Less competition, it creates opportunity from an investment perspective. Some of those will fail. Some of them will have longevity. You'd never know. But, the oil market is very similar to the technology market, is in the fact that they need their users to be important. If none of us drove cars, we wouldn't be worrying about the oil prices as much as we do. We wouldn't be worrying about the oil sector as much as we do. The only reason why we do is because it impacts everyone every day that they fill up. It impacts every human being in their monthly cash flow. Well, technology, is accelerating at such a rate that even if it can disrupt one layer of an industry, it has to take time to be able to create the infrastructure layers beneath it to have the appeal for all that liquidity to be shifted over. And I think the exchanges are the prime example of that. And the interoperability of Web3, crypto basically, and the traditional markets being merged, that's the type of synergy that 1 + 1 = 5. And we're seeing that. And that's why all the acquisitions and the money and, all the VC firms are focused on that industry, because it is that marriage that's taking place right now.
So as we come up to the end of the show here, obviously, beginning of this month, we've got a few things to watch. We've got the NFP coming out on Friday. We've got the interest rate decision coming out. I believe it's next week, Andrew, isn't it?
Say that again.
The interest rate decision coming out next week, I believe.
Yeah, and for those that don't know, NFP means non-farm payrolls.
Yeah, jobs reports. So anything else that everybody should be watching out for this month as we kind of get in there, whether it's maybe events or news events of any kind?
No. I think, again, it's inflows. Keep your eye on, do Ethereum ETF inflows accelerate, or do they kind of level off? I'm keeping a sharp eye on that, because that will bode well for the additional coming ETFs, which are going to happen in the next 60 days anyways. Also, Gemini's IPO is about to jump off. There's a lot that's not on the calendar already that will be meaningful.
Tell me, Shirt is making the excitement now in the comments.
Well, I mean, I can't teach Fibo anything. He already knows everything I know and then some. So I have to entertain him with my attire. I mean, that's why he's tuning in. I think, he missed the whole show of Substance. He just needed to see my shirt. So he tuned in at the very end to screenshot it. I think he's building a calendar, and this is going to be August 2026 calendar screenshot.
Are you going to be like this? Is that what the like?
In fact, the caption for the podcast. There it is, right there.
Oh my gosh! Which kind of actually, if you think about it, that post kind of relates itself back to a certain gold member show.
Yeah.
Austin.
Gold member. Yeah, gold member. I like the way that gold member used to laugh. I liked his laugh a lot.
And how was that? How
That's how gold member laughed. Okay. Yeah.
Hey, how about instead of shaving your beard in private, let's shave it on the show next week as a public embarrassment. Man. I think that's a good one. I mean,
you want to do that?
I'm game for that. I'm fine with it. Right?
Oh, bring your people, folks. Tune in. You're going to see
Totally
one of the
fine with
beards
it.
get shaved
I'm
live.
totally fine with it. What we'll do is we'll just shave this side of it, and I'll do the rest of the show with shaved and then bearded on the other side. Yeah.
There you go.
Just leave it halfway. Will that fulfill the terms of the contract?
No, it will
I
not.
gotta go to the doctor, you degenerates. I'm out of here. See ya. Say the thing, Chris. Say the thing. The only thing you lose is
Only thing you control is how much you lose, and Andrew didn't control it very well because he's losing his beard. There you go. So I guess, folks, tune in because that looks like it's a thing. Andrew said it.
Hey, I can control how many followers I lose. I put a pudgy penguin as my profile pic, and I got 5 people that said unfollowed immediately. So I can control that for sure.
So that's how you keep your KOL status from hitting KOL status.
Listen, I'm just joining the Tom Lee revolution, man. He's a pudgy penguin. I'm a pudgy penguin. So that's enough said. And in the famous words of Andrew, you follow the patriarchs of the industry. It goes Tom Lee and then BlackRock. Tom Lee is the leader. So we're going full tilt on Ethereum.
Well, there you go. What?
I just said full tilt. Can we end this show, please? It's devolving.
Y'all keep talking. Why are we going to end? Y'all keep talking. All right, listen, we're going to get out of here. Thanks a lot, guys. Always fun. Always good times. Next Wednesday is going to be.
Don't say it. Don't say it.
Interest rate decisions and shaving of his beard next week, guys. Be sure y'all tune in, all right?
The only thing you can control is how much money you make. So go out there and make it.
I'm out of here. Take care, everybody.